Assalamualaikum, my name is Muhammad Muhammad and this video made to explain the plausible recovery trend for Malaysia post-COVID-19. In introduction, this section will explain relevant terms for this issue, which are the financial crisis, ASEAN financial crisis, and the business cycle, which includes the trend of recovery and the recession trend. The first term to being discussed is financial crisis. Crisis can be said as a situation of experiencing hard time. Financial crisis is such a complex term to being defined as different definition between scholars. The terminology itself can produce wide meaning. Klassen and Aaron Cosse gave the element to classify of a situation that can be considered as a financial crisis. First is the major changes in credit volume and asset price. Can be said as the default of loan and the asset booming. Next is the disruption in financial intermediation. Somewhat problem in the system of financial, especially in the middlemen such as bank. And next is the supply of external financing to various actors in the economy. The external financing can be said as the debt, but the debt that unable to be paid is not good. Next is the large scale balance sheet problem. It can be in firms, household, financial intermediaries, and sovereigns. As business are making profit, they pay dividend, but for somehow they can have excessive and meaningful debt. They can produce profit, but the debt is still there. Large scale government support is the next element in the form of liquidity support and recapitalization. As in the ASEAN financial crisis, during the crisis, government tried to balance the economy and currency exchange rate. Meanwhile, Kanan, Scott, and Tellens define financial crisis as a financial disruption in financial institution. From 122 samples of recession that they choose, 15 of them is a financial crisis. Others are caused by the oil price volatility, monetary and fiscal policy, and the external demand shock. ASEAN financial crisis happens in 1997. The crisis affects several ASEAN countries that previously booming in gross domestic product. As Malaysia itself, on the 1996, the GDP is 9% of growth. The devaluation of currency rates starts from Thai baht and affect to other ASEAN countries, and ASEAN Development Bank consider this crisis as currency crisis. Business cycle is the next terminology to being defined under this issue. The business are not always growth nor in doom. There are two conditions under this cycle, which are recession and recovery. Under the recession, the business are going down. They go from the upper level to the lower level. The economy and business are slowing down. Not much growth can be made in this phase. Typical fall for gross domestic product for particular countries around -2%. If it can go beyond -10%, it can be considered as a depression. World have faced Great Depression before. Under the recovery trend, business and economy are doing good. Business and economy go from the lower level to the upper level. In this phase, business and economy activities can be more active. The growth can be exceed to 20% of GDP, and all of this can be considered as 5 years duration. It is not compulsory to be 5 years, but it can consider as approximate.
Because of excessive foreign investment and short-term debt accumulation, the Southeast Asia economy inflated in the mid-1990s. Thailand, Singapore, Malaysia, Indonesia, and South Korea have gathered a huge sum of foreign capital in the short term to support the higher interest rate and continue the economic crash. However, the downturn in the global economy had negative effects on the exports because the increasing interest rates in the US made its goods less competitive. These countries were therefore required to pay more for their external debt. Moreover, their currencies declined considerably over the US dollar in the same period. As a result, these countries' external debts have gone up in value. The effects: the government have to seek the international financial institutions to prevent a major crisis. Okay, next, the increasing US interest rates have raised production costs for countries in South Asia due to loan money and limited exports. As the foreign currency has converted to local currency with its foreign currency reserve, the prices of these countries on the continent have risen, and their central banks have become wasted. As a result, exchange rates have been altered to a helpful rate for exporters. However, both capital and corporate markets continue to respond to currency fluctuation because of the fixed exchange rule. The government's loan policies for less efficient investment firms also contributed to the crisis and resulted in the credit companies' outstanding decreasing loans because of moral corruption. The International Monetary Fund (IMF), regardless of economic development or inflation, provided the area with foreign investment by giving money to any government that wanted it. The Southeast Asia countries were afraid that their debts would be refinanced to make loans to the less lucrative firms more complicated. The IMF compelled these governments to hike their interest rates. It included requirements such as the minimum ratio of reserve, which the IMF made nations such as Thailand adhere to. Most of the money was invested in the property market and not in manufacturing, which aggravated the impact of the crisis. The crisis began when Thailand's currency was continuously lowered against the US dollar, and the Thailand economy was significantly weakened. The issue rapidly spread across the whole area, including the Philippines, Indonesia, Malaysia, South Korea, and Singapore, and Taiwan. Some months later, the value of Indonesian rupiah, South Korean, and Malaysian ringgit collapsed, with over $100 trillion in capital flows losing each currency. As the single deficit country and largest importing country in the area, the world expects Japan to undertake some financing activities to improve the financial crisis in the area. However, Japan stayed mute. Japan's imports from these countries were encouraged worldwide to support these nations. The Japanese government has increased its spending in other areas rather than achieving its pledge. The Japanese yen has severely devalued against the US dollar. Under such circumstances, and the significant relief of the site is Chinese fixed exchange rate. In worsening the crisis, the IMF rescued the nations and provided financial help to ensure that specific terms have been strictly complied with. The challenging strategy involved cutting public spending, privatizing public assets, raising taxes and eliminating it for failed groups of these nations.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Muizzuddin bin Mahathir. I will present the effects of Asian financial crisis. Asian financial crisis give impact on the exchange rates. The implications of this phenomenon are so profound that it not only devalues the currency and share price of a country involved, but also leads to an overall economic downturn as well as an infectious effect on regional countries. Currency devaluation spread throughout Asia. Thailand, for example, has experienced a devaluation of the baht to its lowest level in 30 years, a situation that has rocked the whole of Thailand. Since to July 1997, its value has declined by up to 25%. Furthermore, the Thailand economy is projected to grow only 2.5 to 3% in 1997, the slowest rate in 3 decades, compared to 6.4% in 1996. Since July 1997, the value of the ringgit has fallen significantly from 2 ringgit 50 cent to 1 US dollar. The ringgit depreciated to 4 ringgit 16 cent on 8 July 1998 to 1 US dollar. On the other hand, the US dollar strengthened by 66% against the ringgit. The fall in the currency is closely related to the fall in the stock exchange. The Kuala Lumpur Stock Exchange KLSE Composite Index, for example, plunged from a height of 1,271 on 25 February 1997 to 262.7 points on 1st September 1998. The market value declined more than two-thirds from the height, from RM 970 billion to 181.5 billion during the period. The same causes losses in excess of RM 700 billion in its stocks. From 1996 to 1997, gross domestic product (GDP) per capita fell 43.2% in Indonesia, 21.2% in Thailand, 90% in Malaysia, 18.5% in South Korea, and 12.5% in the Philippines, Hong Kong, China, Singapore, and Japan also experienced declines, but were less affected. In addition, besides giving the economic impact, the Asia financial crisis also resulted in political impact. The Prime Minister of Thailand, Yong Chayut, and the President of Indonesia, Suharto, resigned. The biggest impact in the Indonesian political system was the fall of Suharto's New Order regime. Even so, it is not easy for B.J. Habibie to be accepted by Indonesians because they still consider B.J. Habibie is still under the old New Order government pioneered by Suharto. This causes more than 8,000 students to demonstrate in the Jakarta Parliament to show anti-Habibie. This was the largest protest in Jakarta after the fall of Suharto. B.J. Habibie is trying to implement changes in the administration in Indonesia that he does not want to be overshadowed by President Suharto's rule.
Assalamualaikum warahmatullahi wabarakatuh. My name is Luqman Amani bin Jalaluddin, and I am from Group 6, which is the last group. And here today I am going to be explaining about a V-shaped recovery and as well as an L-shaped recovery. So firstly, what is a V-shaped recovery? A V-shaped recovery is the place where a sharp decrease in the economy, it went down, and is trailed by a fast recovery back to the top. This is mentioned by Desi in 2021. So in the United States of America, A V-shaped recovery is a time of financial decay, then at that point a short box, lastly a fast recovery back to the top. Most times of downturn and afterward recovery comes as a V-shaped recovery. So mostly the V-shaped recovery happens if there is an increase in customers' demands as well as spending to boost the economy of a country. As far as the Malaysian economy is concerned, the economic data for the second quarter 2020 Q2 is a manifestation of the imminent of a V-shaped recovery. So the economy seems to have bottomed out and is now rising back from the bottom in making the last form of V. So it's coming back to the top, as mentioned by Zainal Abidin in 2020. And a V-shaped rebound means a sharp return to the previous peak after a sharp decline in these indicators. This is a V-shaped recovery, where suddenly the economy have a sharp decrease and then it is recover back to the top, make it a V-shape. So the next one is, what is an L-shaped recovery? Meanwhile, for L-shaped recovery, it is quite different from the V-shaped recovery. This is because an L-shaped recession is a recession that subsides rapidly and cannot be recovered or will recover in a very long time. So L-shaped recessions are the worst because they have no hope of recovery, as mentioned by Hansen in 2020. This is because the effects from the pandemic of COVID-19 have really impacted most of the country's economic growth, and L-shaped recovery is the last thing any country in the world wanted to face. The official recession may end in a few quarters, but it may take years for the economy to return to the pre-recession level based on RODEC 2020. This is because it is hard for the economy of a country to recover back from it became an L-shape. So for example, in 1990, Japan experienced the L-shaped recovery that led the country to turn into a depression, which is constantly weakened. From the years after the World War II to the late 1980s, the country's economy has maintained steady growth. But since the overvaluation in the early 1990s, Japan's economic growth has continued to weaken and has not yet returned to the growth rate since the 1950s to 1980s. This is based on Hoskins in 2020. But fortunately in Malaysia, it is unlikely for Malaysia to experience an L-shaped recovery, even though Malaysia's economy has grown at a compound growth at a 4.7% growth rate for the past 10 years. It is because most of the growth is actually driven by a debt-driven consumer frenzy and investment, which was once be the most contributive factor for the economy boost. Thank you so much.
Assalamualaikum warahmatullahi wabarakatuh. My name is Amir Iskandar bin Azami. So, the author in opinion that Malaysian economy will recover in V shape or L shape. So, for me, I would agree to the author that Malaysian economy will recover in V shape. This is because some economists are of the view that the country may see a V shape economic recover this year, supported by several factors such as global economic growth, immunization program, and increased consumer spending. V-shape is where a sharp economic downturn is followed by a rapid recovery back to previous peaks. The country is no stranger to external shocks. For the past 2 decades, it has weathered the 1997 ASEAN financial crisis, the 2000 dot-com bubble, and the 2008 global financial crisis. Except for the dot-com bubble, Malaysian gross domestic product (GDP) contracted significantly by 11.2% year-on-year and 5.8% year-on-year during the AFC and GFC respectively. So compared with a decline of 0.4% year-on-year during the 2000 crisis. Amid the current COVID-19 pandemic-induced recession, we are most likely poised for a V-shaped recovery, given that the slower GDP Malaysia contraction of 7% in 3 quarter 2020 versus a 17.1% contraction in quarter 2 2020. The rapid recovery is also evidenced by the improved consumer sentiment index (CSI) from 51.1 in 2 quarter 2020 to 90.1 and 91.5 in the subsequent third and fourth quarter. Following the reopening of commercial activities, coupled with better performance presented by other economic tracking metrics, such as the increased volume popularly transaction from 42,809 units in 2 quarter 2020 to 89,245 units in 3 quarter 2020, and the increase in bank loan application from 51,853 million to 106,249 million in 3 quarter 2020. While the full recovery of the pre-pandemic recovery economy appears to be on track, it remains uncertain as the Malaysian economy no longer relies solely on fiscal stimulus package as efficiency in handling viral outbreaks, but also on how will other countries perform in curbing the economic damage, as well as how quickly global trade can resume. In addition, the Malaysian economy is on track to recover from a drastic V-shaped rebound supported by unexpected rapid growth in several sectors after the economy reopened in May despite recording a sharp contraction in the second quarter of 2020. According to Bank Negara Malaysia, Governor Datuk Nur Syamsiah bin Muhammad Yunus, there are several economic indicators that show spending such as wholesale and retail trade, industrial production and credit card spending made progress after being hit in April. Gross export also increased in June 2020, indicating potential towards a recovery in external demand.
As conclusion, saving and investment are important. Do not rely too much on government as they have limited resources. People should prepare for the worst, and by the preparation, people can use the economist's prediction in business cycle. It is not perfectly accurate, but it can be as a guideline. People should manage the risk and not being too excited when the business are booming. On the other hand, government should less rely on the commodity as it give a big risk to country. The volatility and excessive price movement in commodity such as crude oil, petroleum and crude palm oil can give risk to the growth of GDP. Thank you.